Hello everyone, North Star VFD Consultancy welcome you to another chapter of Introduction to International Financial Reporting Standards. This video is part 4, IAS1, Presentation of Financial Statements. In previous 3 videos of IAS1, we discussed IAS1 history, its objective, scope and scope limitation, purpose, general features of financial statements, structure and minimum content required in Statement of Financial Position and Performance Statement. In this chapter we will discuss structure and minimum content requirements for Statement of Changes in Equity, Statement of Cash Flow and Notes and Disclosure of Financial Statements. Statement of Changes in Equity. The Statement of Changes in Equity includes the following information. A. Total comprehensive income for the period, showing separately the total amount attributable to owners of the parent and to non-controlling interests. B. For each component of equity, the effects of retrospective application of accounting policies or restatement recognized in accordance with IAS 8, and C. For each component of equity, a reconciliation between the carrying amount at the beginning and the end of the period, separately disclosing changes resulting from 1. Profit or loss. 2. Other comprehensive income. And 3. Transactions with owners in their capacity as owners, showing separately contributions by and distributions to owners, and changes in ownership interests in subsidiaries, that do not result in a loss of control. Information to be presented in the Statement of Changes in Equity or in the notes. For each component of equity, an entity shall present, either in the Statement of Changes in Equity or in the notes, an analysis of other comprehensive income by item. An entity shall present, either in the Statement of Changes in Equity or in the notes, the amount of dividends recognized as distributions to owners during the period, and the related amount of dividends per share. Please refer, sample statement of cash flow displayed on screen. Next, we look into Statement of Cash Flow. Statement of Cash Flows. Cash flow information provides users of financial statements a basis to assess the ability of the entity to generate cash and cash equivalents and the needs of the entity to utilize those cash flows. IAS 7, Statement of Cash Flows, sets out requirements for the presentation and disclosure of cash flow information. Since Statement of Cash Flows requirements and details are specified in IAS 7 standard, we will look into Statement of Cash Flow in details in a separate video dedicated to IAS 7 standard. Notes to the financial statements. An entity should, as far as practicable, present notes in a systematic manner, considering the effect on the understandability and comparability of its financial statements. An entity must cross-reference each item in the Statements of Financial Position and in the Statements of Profit or Loss and Other Comprehensive Income, and in the Statements of Changes in Equity and of Cash Flows to any related information in the notes. IAS 1 suggests the order of the notes as follows. 1. Statement of Compliance with IFRS. 2. Material Accounting Policy Information. 3. Supporting information for items presented in the Statements of Financial Position, and in the Statements of Profit or Loss and Other Comprehensive Income, and in the Statements of Changes in Equity and of Cash Flows, in the order in which each statement and each line item is presented. And 4. Other disclosures, including contingent liabilities, according to IAS 37, and unrecognized contractual commitments. And non-financial disclosures, example, the entity's financial risk management objectives and policies. Disclosure of accounting policy information. An entity should disclose material accounting policy information. Accounting policy information is material if, when considered together with other information included in an entity's financial statements, it can reasonably be expected to influence decisions that the primary users of general-purpose financial statements make on the basis of those financial statements. Accounting policy information that focuses on how an entity has applied the requirements of the IFRS to its own circumstances provides entity-specific information that is more useful to users of financial statements. An entity shall disclose, along with material accounting policy information or other notes, the judgments that management has made in the process of applying the entity's accounting policies and that have the most significant effect on the amounts recognized in the financial statements. Assumptions and sources of estimation uncertainty. An entity should disclose information about the assumptions it makes about the future, and other major sources of estimation uncertainty at the end of the reporting period, which have a significant risk of resulting in a material adjustment to the carrying amounts of assets and liabilities within the next financial year. In respect of those assets and liabilities, the notes shall include details of their nature and their carrying amount as at the end of the reporting period. Notes to financial statements. Disclosure notes related to capital. An entity shall disclose information that enables users of its financial statements to evaluate the entity's objectives, policies, and processes for managing capital. Disclosure notes related to dividends. An entity should disclose the amount of dividends proposed or declared before the financial statements were authorized for issue but not recognized as a distribution to owners during the period, and the related amount per share, and the amount of any cumulative preference dividends not recognized. Disclosure notes related to general information about entity. An entity must disclose the following, if not disclosed elsewhere in information published with the financial statements. 1. The domicile and legal form of the entity, its country of incorporation and the address of its registered office or principal place of business if different from the registered office. 2. The description of the nature of the entity's operations and its principal activities. 3. The name of the parent and the ultimate parent of the group, and 4. If entity is a limited life entity, information regarding the length of its life. This is end of this chapter dedicated to IAS1 presentation of financial statements. Thank you for watching this video. See you next time with another chapter of International Financial Reporting Standards.